Guess who's back? After a full year, I didn't cut my hair, I didn't upgrade it and leveled up. Now it's time to get back to these charts. So, with no further ado, welcome back, myself and you. I'm glad you're watching. This is my video on how I caught 500 plus pips on EURJPY and SPX. So, with no further ado, let's get into the video. But before we do so, make sure you like, comment, share, and subscribe. Hit that bell, turn on them post notifications. Let a nigga know that you did that by commenting as well. So with no further ado, straight to the video. See y'all later.
I lowered my TP. I might hold it a little after just for it to get hit. If it gets hit. I lowered it to about 42.27. So I can be a little more realistic because I doubt that it's just gonna make a jump all the way up here before 11. Maybe it can. Because it's funny that it formed a head and shoulders pattern at a place where that's not even why I bought in the first place. I hold to about here 42.27. Starts to retrace a little too much or anything, then I'll call it a day. I want to walk you guys through me trading this. Long story short, before I show you guys the more long way, I noticed that price had, you see the movement of price. It formed a nice upwards movement, and then it got a little choppy, took out these buyers, and then went up some more, and then it started to retrace a lot. So I seen that people were selling, and it was a big sell-off to close out the week last week. But at the same time, I don't like to, this is not no financial advice or anything, but I've been trading SPX for quite some time, at least a full almost 2 years, more than Forex, because I trade indices more than Forex. There was a big sell-off. I was looking for opportunities to buy, so the momentum still was downwards, but I decided to place a buy because the market was already making higher highs and going upwards from here. Well, it got a little choppy around this way, but it was an okay enough uptrend for me to feel like, okay, this downwards move, ironically, to the 618 level on the fib was a liquidity grab, obviously. So this one downwards motion from here to here took out everybody that was buying here. Everybody that bought this one took out this one, but this whole leg took out these people over here, took out these people, and you can see this is where the little box was at. And I was curious to see, like, I like confluence when I trade, so once I seen liquidity being grabbed, I was like, I just don't want to buy. Let me see where the market sentiment is at on a few indicators. So I looked on the RSI to see if there was any divergence, and on the 4-hour, the RSI was extremely oversold, and it was, exhausted. So once I seen that, I was like, okay, this market might reach, it might reverse upwards. So placed a buy after I seen this candlestick form on this 1 hour. This candlestick, actually not 1 hour. This on the 2 hour, this candlestick form right on the 618 level. Ironically, after I noticed that the fib was oversold, you can see a little head and shoulders in here. If I go on a small time frame, you can see an inverted head and shoulders as well. And these things that all happened after I placed my trade. I seen now you can say what you want about the trade, but one thing you cannot say is that I'm capping about anything, because if I go here, you can literally see I'm up 420 pips. So it ain't like I'm just up $10, and now I'm up $42 on the 10-cent lot size. So if I go here, I go to chart, you can see where I bought it. My stop loss is at pretty much break even. So that's that. But yeah, I placed it when I seen. Now it wasn't right afterwards. That's what I will say. I didn't want to just enter the trade and go off of, okay, one candlestick pattern and it's at this level, it's over. So even though those are three confluences, I wanted to see momentum. That's what I was more concerned about. So once I seen, I could even show you on MetaTrader. Once I seen this candlestick form, and I seen the momentum shifting upwards, I was like, okay, I'll get in, put my stop loss, either below this candle or below on a smaller time frame, like somewhere around here. So, or maybe in this area, depending on if you caught this part or like a little more up here, because it would make sense to buy right here and then put your stop loss all the way down here, unless you got your your return, but that ain't gonna always happen. Once it became really oversold, price was all the way down here. It didn't make this upwards move. I caught this upwards move on this whole one. So it wasn't like this last night or before I went to bed. So and also the session, that's something else that was important. The session is probably the most important thing. I don't care about no indicator. I don't care about no price action. I don't care about none of that shit if the timing is off. If it is after the hours, if like 11:30, it's definitely after 12. Because quite honestly, I'm trying to get into the habit of not trading after like 12 for real. Because I would much rather just close my position and then find a re-entry point than just hold after being up by so much. I would much rather just come back and try for another entry. The timing is everything to me. Like the fib 618 retracement isn't important if it's 8 p.m. or if it's 7 p.m. That shit don't help me at all. And you can get into a trade, yeah, but that doesn't mean you're gonna see what you think you see, or that doesn't mean that you're just as probable if you took that same exact setup at a different time. So I pay attention to the London session because I'm usually staying up, but I'm still able to get up around the time either right before the move happened or right as it's happening. As far as risk, I will say I did enter these trades without a stop loss. Do that at your own risk. I did that because once I entered, I was making sure that the market was still having the same momentum I seen when I was on the outside of it, and I was willing to close immediately. If I shot down to maybe $5 to $10, I would have exited my position, because you can see over here, I don't really like to be down much. I like to get in my moves, and I like for them to play out rather not fast, meaning like in a scalper way, but in a way of it's not a hassle off the strength of me because I got in at the wrong time, or because of this or because of that. I would much rather just exit my position and re-enter. So there's a lot of confluence and a lot of things that added up to me that made me want to get into this position and watch it until really I was in profit, which was pretty instant. Like I said, I had no issues with it. You can see where I bought it at. I can go all the way down here to the 1 minute. I bought it around this area here. Now you can see where I bought it at. It's not any, like, you see this, like, this little dip, but I didn't buy right there. I bought it on its way up. So I wanted to see momentum and all before I just bought and went to sleep. Because, mind you, I didn't want to just buy because I'm like, oh, this got to play out because it's like this. No, I wanted to be like, okay, after all I've seen on top of the market showing me that it's bullish, I'm buying. So, like I said, I told you guys I didn't experience any drawdown. Then a lot of you, this is the 1 minute chart. What drawdown do you really see? After, and it's a 1 minute chart. This, after literally I placed this buy, is literally just up from here. If the market is consolidating, and you enter it, your money is gonna consolidate. Meaning it's gonna go up $2, go down $5, go up $2, go down 3, go back up 10. Like, it's gonna do all of those things. It's not gonna go nowhere. So once you enter your trade and you seeing that the market ain't doing shit, just get the fuck out. Just cut it, because that's better than holding it, hoping to, okay, well, I'm still holding on to my judgment on the market, or whatever the case is. It's much better to get out and watch it than stay in and lose money and watch it. Because if you do that, it's going to be hard for you to focus on the initial move, because if you're right, you're going to be right no matter how much the market consolidates, no matter how much it goes down, no matter how much it retraces or goes up or whatever. You're still going to be right. You just entered at the wrong time. Just pay attention to that and make sure when you guys are in these trades, if you're going to trade with a stop loss, monitor your trade until you're at least in profit and put it at break even. So I didn't say don't trade without stop loss. I'm literally just saying entering the trade, without one. I'm not finishing this trade without the stop loss. If you catch my drift, I entered, watched just like a scalper would to make sure the market is still going in my favor before I just get cocky or comfortable and just, okay, well, bye now, I'm good. I was in profit about 50 to like 70 pips, so I'm like, this is good enough for me to break even. If my stop get hit while I'm asleep, it just get hit. So, but I'm going to sleep. So that's the main thing. So it's imperative that you guys use a stop loss at some point. Use them to your advantage. You can manually go in and close the trade if you're eyeing it and making sure it's still going in your favor, and then putting a stop loss on it. That's a much better approach than, okay, well, the market can go down anyway, but it's gonna go in my favor at some point, so I'm gonna not trade with a stop loss. If you plan to walk the hell away from your screen, you plan to not, anything of the sort, put a stop loss on.